to Maverick Currencies FX and Crypto midweek update. It is April 26, 2023, and let's jump right into it. So as we look at this week, a couple of developments that are starting to happen. We'll look at the charts and make sense of them together, but I really like the setup for a risk-on move, and we'll talk about why that's the case. I think the risk to reward of it at least is excellent. They don't always play out. I mean, there's no such thing as a perfect science to this, right? But we're weighing the evidence. We're weighing the technicals, the fundamentals, the market sentiment. We're looking for good risk to reward opportunities, and then we're putting some money to work. If it doesn't work, we try to lose a little. If it does work, we try to make more than that. US dollar also signals the exact same thing. Not only are we in a longer term downtrend, but a shorter term setup developing there as well. And so we like that dynamic where you have the short term and the long term mixing and really setting up together. Now, we'll get to that here in a second, but the numbers overall continue to point towards maybe some pain being felt in the back half of this year. I don't think longer term stocks are a great risk to reward. I think they are shorter term. I don't think that the US dollar is at major risk. You know, there's all this news circulating about the US dollar's lack of ability to stay as the reserve currency of the world. A lot has been made about its ultimate demise and so on, and that's just overblown. I mean, it's just not backed up by the statistics. In fact, if I were to look at giving you some statistics, look, in the past 25 years, US dollar reserves have gone from 71% to 58%, but that's over 25 years that the US dollar has lost 13% of its reserve status. Now, a lot's been made about, oh, well, China is going to take over. China is going to become the reserve currency of the world. Give me a break. I mean, the US dollar makes up 58% of reserves. China makes up 2.7%. It's not even I mean, this is no competition, right? If these were businesses and somebody had 58% of market share and the other had 2.7, would everyone be clamoring that the one that's at 2.7 is about to overtake the one that's at 58% of market share? I mean, kind of give me a break about that. Now, will there be a gradual process of the dollar losing its reserve status? Yeah, I mean, it's going to continue to decline, but it's not going to be because of China. You know, China might increase a little, but people just don't trust around the world, for the most part, don't trust China. And when most of your wealth is in the people, the politicians' hands, those that govern, that's a big red flag, right? And so China, Russia, these places where they accumulate all the wealth, where individuals might end up having a mysterious accident out a window, and that continues to happen if you fight against Putin and so on. Those are not realistic competition to the U.S. If you're looking at the competition to the U.S., it's just globally. It's just, hey, in Europe, the euro might become more of a reserve currency and take a little market share. And this place might take a little market share and so on. And gradually the US dollar will lose some of its reserve status. But I just want to be very clear that sometimes people get really nervous, and it's a big talking point, and it's usually someone that wants to sell something like gold or something, and they'll say, well, the dollar's going to lose its reserve status, get into gold today before your dollar collapses in value and so on. And you got to be realistic, and you got to look at the data and not let that fear mongering kind of get the best of you. So as we look at the economic reports in the U.S., consumer confidence misses at 1.13 versus 104 expected. Sentiment is down. We touched on this, that sentiment's negative, and that's part of why I like the risk on setup. I think it lends some fuel to the fire, and I really think that the market's not going to finish going up until the big blow off top. When sentiment is this negative, the blow off top is that much more likely. In Australia, CPI came in higher than expected quarter over quarter at 1.4 versus 1.3 expected. Interestingly enough, even with CPI running a little hot, the Aussie's having kind of a rough week, and durable goods, US blew it out of the water, 3.2 versus the 0.7. Is the US in a deep recession right now? No, absolutely not. Are we going into a recession later this year? Quite possibly, right? And that's something that will evolve over time. I think the Fed is still in quantitative tightening, but I think this recession's going to be a tricky one where it's kind of a rolling recession. It's not everything all at once, and that's going to be part of the difficulty for people in evaluating it. So as we look at this week, S&P down 1.3, international markets down 1.2, crypto, almost all of crypto is today. And today's news is FRC bank possibly collapsing, even needing a government takeover, needing big banks to step in. It's down like, I want to say 40% this week and so on. And remember, this is the recipe for crypto and gold. Now, gold's not even bouncing much on this FRC news, but crypto is. Crypto has bounced sharply, and crypto had a better setup. We'll talk about it actually hit the Bollinger Band buy setup over the past couple of days. Not to now. Today, it's accelerating off of that. Oil down, but ultimately, these are headlines that should help crypto and gold. If you're looking at which one to short gold, because it's not even getting a bounce on this, which should be exactly what gold needs in order to move higher. Now, let's get to our outlook here, and I really like this chart setup in the S&P. Resistance is at 4180, right? And that's pretty clear. The first time you came up to 4180 was the exhaustion highs we talked about at the time. That first blow off top, right? That signaled that the uptrend had kind of run out of gas. We had gone a long ways to the upside to get here and so forth. And sure enough, we had a deep, big plunge. That big plunge is the start of the cup. So you have resistance established. You decline all the way down here, and we didn't know exactly where the bottom would be, but it established a bottom, rallied back up, and of course the first time you come up to that resistance, you retest, right? You establish resistance, the first retest. Does it just go up after expending all of this energy? Do you just blow out through the resistance? No, not normally. Normally you're going to respond and you're going to back and fill. It took a lot of buying power just to get up to this zone. It took a lot of buyers to step in. It took a lot of short covering. It took a lot of demand to get prices up here, and demand just ran out. It just, hey, we've bought as much as we're going to buy. Now we're at resistance. There's more reasons to sell. People get a little nervous. Hey, we'll probably fall back at resistance. This is a good place to lock in some profits. And so the shift takes place. Perfectly normal and exactly what you would expect. Demand wanes, supply comes in more aggressively, and you fall back. But this pullback is the one that's interesting because you have a deep cup and then the shallow handle. Usually, how big's the handle? About 30% of the size of the cup. So 4180 to, let's call it 3820 is the size of the cup. Well, I'll pull up a calculator here just so you can see the math. It's not real complicated. You just take the size of the cup and then multiply that size by 0.3. So 4180 minus 3820. The cup is 360 points. The handle should be about 0.3 size of that, or 30%, about 108. So as you back up from about this 4180 zone, you should back up to about, 4180 minus 108 is about 4072. We were touching that number earlier today. we're still right around that number. Now, it's not an exact science. It's not like you need to go back to 40.72, and if you hit 40.71, the trade's broken. Remember, it's just the 30% range. The point being that this is about where the handle should find support. Now, if you come down here and you break the 50 MA, you've gone too far, you're clearly not holding up, the entire trade is broken, etc., right? It presents a very good risk to reward because you know you're wrong quickly, but it probably works and works its way back up, not only to resistance, but you've heard the saying, the third time's the charm. You get back up to 41.80, the third time, you're probably going to break through, right? This is now big cup, shallow handle, you break out, and you can actually have a much bigger price target in that if we go back up to resistance the third time, we should break through. And how far should you go? About the size of the handle on the other side. So here's the size of the handle here. It should make about that big a size move on the other side. So in other words, from 41.80 resistance, you should go up about 108. 41.80 plus the size of the handle would put us up at 42.88 in the index. So pretty good upside expectation. And my guess is that at those types of numbers is where the top is probably going to form. I talked about this last week, that I think before this thing is done, it's going to have some sort of big blow off top scenario. That's how I would project this to play out. And I like the setup here. It's not just the S&P, by the way. If we were to look at the NASDAQ, if we were to look at some other markets, similarly bullish patterns. In fact, if you go pull up a chart of QQQ, the NASDAQ 100, the largest, mostly tech names, well, they have a Bollinger Band buy setup. They've pulled back, hit the lower band, still above the 50 MA and bouncing. We've got patterns within patterns pointing to bullish outcomes. Now, does it guarantee success? Of course not. Is it likely, in my estimation, in my opinion, to work its way higher to a pretty good extent in the coming weeks? Yes, it is. So I'm certainly on the risk-on camp, on the bullish camp, anticipating and expecting that we'll see more upside before this thing's all said and done. And pretty decent target, as far as how far this can go big picture, is probably up there towards 42.88-ish, right? Somewhere up in that area. So interesting chart setups materializing in the markets. Like we talked about, the only currency really moving, two, I guess. Euro continues to be stellar, just working its way higher. And then Aussie. We talked about Aussie and Kiwi look like trash. CAD's down a bit. I was optimistic on CAD, and look, as a point of reference, do the cup and handles work? I got stopped out on a CAD trade last week. I liked it for a trade. We talked about it, and it didn't bounce. And oil took another leg lower. Some things that impact the Canadian dollar did not come out, and it pushed lower. So they're not perfect by any means. Now, I did reference that one thing that concerned me about the CAD, usually when you like the cup and handle the best, it's after somewhat of an upward trend. It's like a continuation pattern, that sort of thing. It's not as good as sort of a bottoming pattern. When you see a cup and handle that's maybe like this, it still can work, but you also have all this overhead resistance to contend with. And that's one of the things we referenced with the CAD, is it's not perfectly set up in that you still had quite a bit of ugly overhead resistance. We thought it would still bounce. I was more along the lines of you can play it for a bounce back up to resistance, something like that. It didn't materialize. It just fell apart. So it's better than Aussie and Kiwi has been the past few weeks. I thought that was meaningful to a certain extent, and none of those worked their way higher. Again, everything in crypto basically has happened today. Today is the day where another shoe has dropped in the regional banks, and it's weird how this works, but today's the day where this big risk hit the markets, and yet the markets have turned higher and turned positive on the day. The crypto markets are reacting to it. Not a lot of other markets are reacting to it in the same way. So we'll see if crypto can continue to sustain that. But actually, we'll look at some of those crypto charts because they did have bullish dynamics in play. Now look, if you're just grading the market, where are we at in context? We've pulled back, but the slopes have turned more positive. Now, we did dip below the 20, so that would be a little bit in the red just in terms of a, make sure you get back above the 20 type of idea. But a little bounce here in the equity markets, and we'd have all three green. Above the 20, above the 50, and now the slope's turning positive. So much more bullish overall. If we look at international markets, again, similar to the S&P, I would say, in terms of context and expectation. Big cup, shallow handle. The next stop should be another push to the upside. Things don't go in straight lines, so you can't just expect it to stay this vertical. A correction like this is perfectly normal, completely expected, and these have to be the spots where you stick your neck out there a little bit and you take a stand. Because look, you can't say, I want a pullback, I want to pull, and then every time a pullback happens, you go, oh, well, this one looks crappy, this one looks scary, this one looks this. Look, we sold off a bit yesterday. It was on light volumes. It was not anything that looks too dramatic or anything like that to give me heartburn and say, well, we can't go higher. Now, I mentioned the crypto markets. Bitcoin, we don't have the Bollinger Bands on here, but go slap them on your own charts. The Bollinger Bands are like this. You hit that lower band, the upper band's like this. You hit the lower band, held at the 50-period moving average, and away we go. Perfect recipe for Bitcoin and crypto in general is bank unrest, people nervous about currency. I mean, that's the recipe, right? I've had a bearish outlook. We highlighted this exhaustion. You can't see it on this chart quite as well, but this was a nice big exhaustion. It shows up in the ETFs. It shows up in some of the other crypto, but this is a case where all of crypto kind of had an exhaustion high here, and then we expected a downturn. I had to remove that idea, though, because we got a clear conflicting signal. When you have the bullish Bollinger Band set up, I just give it credence. I say, okay, well, remove the short idea, remove that thesis, and then we'll look to short it again, potentially, or we'll look to buy it. I mean, that was a buy setup. So if you're doing anything with crypto at this moment, at this snapshot in time, you'd have to be more of a buyer. I did not buy. I should have, right? I removed bearish thesis and trading and whatnot, but I did not go bullish and should have done so on that setup. So as we look at the rest of this week, we've got advanced GDP out tomorrow morning. Again, still not negative. We're not in that, hey, we're hitting deep recession numbers or anything like that. You can see prior report at 2.6, now at 2%. 2% growth. In real terms, based on what the inflation rate is negative. So if you look at it on an inflation adjusted basis, what they call real numbers, right? Because you back out inflation, real numbers being negative, because if you grow at 2% but inflation's running at 5%, well, you're losing 3% on a comparative basis. But nevertheless, not at big, deep negative numbers, and so many people would have anticipated that we would have been in a recession by now. maybe even expected that we would have been in a recession end of last year, and it just hasn't happened to this point. GDP, and then following that, I mean, we got the Bank of Japan out tomorrow night as well. We get some GDP out of Canada. This core PCE index, that's an inflation number. And whenever you have the inflation numbers, those need to be highlighted. I would suggest this has more potential to move the market certainly than that. I don't think that the GDP coming in 0.1, better, worse, whatever. But the core PCE, that one is a Fed-based number target. One of the things that they'll be using for policy. If inflation comes in hotter than expected, that would not be so good. One would think for equities, it would mean a tighter Fed, more likelihood that they're going to be more aggressive and things of that sort. So let's look at a few different charts here. We had some requests come in, and we'll take a look at some things together. I wanted to start with CAD because I was optimistic. Now, we talked about the problem with CAD was that potentially this was just a big trading range, and that's exactly what it has evolved into being. I was thinking, well, this could be the process of getting out of this. It wasn't. It didn't stop. I jumped the gun a little bit personally because I got stopped out, but anywho, looking at it from the standpoint, it's just choppy, and that's all it is at this point. Not a great setup. In hindsight, I don't love using the cup and handles in a bottoming pattern. I thought there were some other factors in play that would help this trade, but again, it was just the wrong setup. I think the S&P chart, actually the US dollar is in sort of the inverse of this, and they look better because they have more of the characteristics of trend working with them in advance of that. So you don't see it as much here, but you can see the US dollar against everything. It's up against underneath the 50 MA and below the 20. So US dollar could turn down right here. This makes sense to me. Down right here, and then if I turn to the dollar index, it's even a little bit more clear. Watch this. If we look at the dollar index, what they call the Dixie, this is a little bit better scenario for a cup and handle. See how we came from a downtrend and we don't have that underlying support here. So look at the chart, the pattern, the setup and such. See the inverse cup and handle in US dollars, and the expectation would be a leg lower. And this fits with our risk on approach. I think equities start to bounce right here. I think that the rally could be pretty surprisingly strong. Now, we'll see if it materializes, right? I mean, maybe we're just in this choppy, ugly market, and that's certainly been the case. So I don't want to get too aggressive with this call. But as equities start to bounce and work their way higher, US dollar should be working its way lower out of this. And you can see that in the Dixie, the dollar index. And it's a better chart pattern for a cup and handle in that it's working with that trend in that way. Ethereum versus US dollar, we had a request for. Now this is on the daily chart, and just like Bitcoin has the Bollinger Band set up, Ethereum was the other one. In fact, if we come up here, just slap on the Bollinger Bands. Let me make sure that they're set at 20 and 2. Okay, so I take that back. Ethereum didn't quite touch the lower band, but you can see the same concept at the 50 MA. Bitcoin, that's weird. Why is it not showing it? I just looked at this earlier. Oh, that's against US dollar. Okay. So in that case, we're comparing them solely to US dollar pairings versus where I was just looking at the charts themselves. But anyways, if you look at it from the standpoint of Bitcoin versus US dollar, I guess it didn't quite touch that lower band. I was looking at it in this scale, GBTC, which is the Bitcoin ETF. So that's a little bit different. The ETF is kind of interesting because it's a chart that's tradable in terms of stock, right? So here we've got the grayscale Bitcoin ETF. You can go long, short, do different things with the ETF itself in the stock market. Looking at it, it had the really nice exhaustion signal that we utilized. It had the really nice Bollinger Band buy setup that I also utilized in terms of anticipating the bounce. So it works a little bit different than these Bitcoin versus US dollar, where it's just stacked purely against USD. Here you're just looking at the ETF itself, just the buying and selling of the Bitcoin, not versus a currency specifically. If you wanted to layer Bitcoin or Ethereum against some other currency, you can do that. If we look at Japanese yen is similar to US dollar in that, see how we're underneath those all important 50 MAs with the recent bounce over the past couple of days. My thought is that, again, I think this is where equities bounce. You should see things like US dollar and Japanese yen come off of that. So risk on means I don't want to be a buyer of Japanese yen. I don't want to be a buyer of USD. Now, we know we've got the Bank of Japan meeting. They just got a new, they just got a new, what do they call it? Like we have the Fed chairman. I'm missing the name, but basically they have a new chairman that's in place, a governor. They've got a new governor in place in Japan. A lot of question marks about what his policies are going to be, how dovish, how hawkish. So there could be some volatility just in terms of the markets may be a little unsettled and not quite sure where he stands on certain items. So that will be worth watching. But my general instinct would be that it should trade like US dollar and have a tendency towards a push to the downside. Okay. Let's look at a few other charts that were requested. EURUCAD. So Euro anything just looks stellar, just explosive, right? Here's the problem you're going to get into with Euro. Anytime you see a chart that's been booming, you have to consider where that race is going to come to an end. Nothing can just go up endlessly, right? So you got to pick your spots. You got to say, okay, are there signs of exhaustion? A multi-day run like this would be exhaustive, especially if followed with a big volume spike. The day's not done, and we're starting to see that volume's already going to creep up here, and maybe by the end of the day, be a spike up here. Big spikes in volume often signal some form of exhaustion or breakout or whatnot. And just as this kind of pull back off of that, this volume and the price action would have me, and also the price action of falling off the highs, would have me contemplating, at least, if nothing else, tightening the stops, possibly even just taking profits and looking elsewhere. So I don't know that this is a big exhaustion signal, but that would be the concern. CAD Swiss franc, almost the same exact concept in reverse. See how the big exhaustion signal happened and then you have a correction? We're not done yet. The volume's already creeping up here. This volume's going to finish here. You're hammering off of the lows. It looks and smells to me as some form of exhaustion. If you are in this chart, you're short. You're short CAD Swiss franc. That's I mean, it's bearish every step of the way. This would be more of a profit-taking signal than anything else. Pound CAD we had a request for. I'm going to put it in the same category of everything in CAD seems to be where the exhaustions are forming. You know, it's been a huge run. Pound CAD had our bullish Bollinger Band setup. See that hit the lower band above the 50. That's a buy setup, and what a great buy setup it was. Now I would be contemplating, again, the volume's still ramping up as we speak, and it's going to finish up here somewhere. You're going to have a big volume day with a big flurry finish. That to me is more of, it doesn't guarantee that today is the day, right? But I would be contemplating taking those off, maybe some profit taking, thinking along those lines. Yeah. Would you get long CAD against the euros or any of these? I mean, that's very aggressive because just because you get an exhaustion doesn't mean you've pinpointed the perfect spot, and it's so counter trend. I usually look at exhaustions as take profit, not great entry point, because you can just chop around. You can maybe go higher for one more day and then come down. It's not as well timed. You know, if you get a Bollinger Band setup, it's like make or break. Here's the setup, nice reversal. It either works or it doesn't. Here we just don't have that. You know, it's kind of tough. I mean, you could trade around this candle, and you could just say, if I'm just aggressive, I short here and put a stop here. But I don't know that that's going to work out as well as you would like. I think there would be a lot of frustration with that. So it's more of a profit taker signal in those charts than anything else. So for the rest of the week, we've got a currency recap coming out on Thursday. Be aware of the Bank of Japan meeting and the PCE index that come out on Friday. Those are a couple of potential market movers. Right here, right now, I think we're more of the risk-on camp. Currency Trading Room will come out this weekend as always, and just have a great week ahead. Appreciate all of you. Really enjoy working with you, and we'll see you same time, same place next week. Goodbye, everyone.